Morning, guys. Happy Thursday. I hope everyone is good. It is the 18th of June, and this is your daily market outlook for today. So, before we get into the charts and discussing what went on with the Fed funds rates yesterday, understand that the content on this YouTube, inside my Discord, or on any videos I do is for educational and informational purposes only. I am not a financial advisor, and nothing shared in my videos should be considered financial, investment, or trading advice. Trading and investing involves risk, and you should always conduct your own research before making any financial decisions. Any past performance discussed does not guarantee future results. You are responsible for your own financial decisions. So let's get straight into the charts and discuss obviously what went on yesterday. So obviously, as you guys can pretty much see, we had obviously Fed fund rates yesterday. And if you look at the actual forecast for Fed fund rates, we had at 3.75%. That's what it was forecast. The previous month was 3.75% as well. And as you can see, it actually came in at 3.75%. So what does that tell us? So just to basically explain, to you guys so you can understand, yesterday the Federal Reserve decided to basically keep interest rates exactly where they are and didn't make any changes at all. So what does this mean? This means basically borrowing money isn't becoming any cheaper or more expensive right now. So it's exactly the same. The reason they kept rates the same is because inflation is still something they're, keeping a close eye on. But at the same time, I want you to understand that they don't want to slow the economy down too much. So what does that mean for us traders? Well, the biggest takeaway that I got away from it is that there is not, there's no major surprise from the Fed. However, the market will now, for me anyway, focus on any hints about the future rate cuts or hikes. So basically, because expectations around interest rates can have a big impact on obviously the dollar and gold and the stock market, just to break it down in simple terms, rates stayed the same. The Fed is being cautious, and traders are now basically looking for clues about what to happen next. So hopefully that makes sense to you guys. It can be a bit complicated when you do go into um, the fundamental side of it. But is that's all it is? Just basically, you can see the forecast is this is what we was expecting yesterday. That was the previous month, and the actual, which you can see here, is what obviously happened, which is exactly as expected. But let's jump into some today's news events. As you can see, we have obviously, read for the news for the Great British Pound has happened this morning. We also have CHF that's happened this morning. And then we've got 1 p.m. Great British Pound read for the news as well. So, definitely keep an eye on the Great British Pound for today. And obviously, make sure that you guys are aware of that if you are participating. Okay, let's get straight into the chart. So, as discussed, we was inside of this daily demand candle. We obviously had this day the higher low, this day the higher high. Pardon me. And as I said yesterday, I was expecting the bullishness to carry on. And that's obviously exactly what happened. We dipped into this demand, and then we obviously had this market now. So we got a new structure from this higher low to this higher high. Now, first thing I can notice is we've obviously tapped deeper into that daily supply area here. We're taking out this high, and we're now tapped into that daily supply. So, of course, if this daily supply was to stick, then what we would need is, of course, a change of trend on the daily. Now, do we have to worry about that today? Well, no, because we're nowhere near any change of trend on the daily at this moment in time. So, looking at the structure, we have a new daily demand area. So, my main thought is, over the next few days or something, can we see some sort of, correctiveness on a smaller time frames into that demand? Same as this slow market structure and the internal into the demand happens over and over and over again, and then potentially go and get that new higher high. So that is what I'm looking for with the daily with the dollar on a daily. If we jump down to the four, we can pretty much see it's pretty simple to understand. You can see that we've got this range on the daily. We've got a 4 hour demand area here, a lot of imbalance to fill. But yeah, as we can see going off yesterday, going into Friday, I think it was. Yeah, you can see Friday we tapped in, or Sunday we tapped in, should we say? into that 4 hour demand area here. And as I explained yesterday, when market came into this area of supply, we failed to go and break a new lower low. So we started to react from this 4 hour demand and the internal 1 hour demands. And if we just jump down to the one quickly, you can see that the areas that we discussed yesterday absolutely played out to a T. And that's not coincidence, that's not a guessing game, that's just understanding supply and demand and the way that I teach. And you guys who do my course, you guys who understand the way that I trade should be able to identify this. Or if you don't at this moment in time, you will do in due time. If obviously you don't, have a clue and you're still plugging into these day market outlooks, you're not invested into mentorship, again, that is something that you'll probably pay long term because mentorship and understanding exactly what's going on is the key to obviously get into where you guys want to be. Now, as you can see, we've got this 4 hour demand. So I want to see pretty much what I just explained, just correctiveness on the lower time frames, slow market conditions, into that demand area. This obviously indicates then, just the same as this does, that we could obviously see the next expansion, as we do here. Expansion, correctiveness, expansion. So we need correctiveness, expansion. So pretty simple to understand. Again, I'm not going to discuss anything on the lowers here because I would just be putting my capital at risk. I would need to see a lot of confirmation to try and even short this personally. So you guys know me. It's a waiting game for me personally. I don't rush into stuff to try and sell down to a demand or vice versa. But as you guys can see on Euro USD, perfect reaction from this daily supply. As you can see, we've now got this new daily range. We didn't finish with a body closure below this, which is obviously a bit annoying. But again, we're following the internal here on the daily, which is extremely bearish. So same scenario is, as you can see on here, very, very corrective. I'm expecting the same. Slow market conditions over the next week or so, or whenever it is, into that supply, and then get that next expansion. You can see expansion. So hopefully that is what we get with your USD. Now going into the 4, we can pretty much see the structure of what's going on. We had this 4 hour supply area. Obviously yesterday internal, you can see, has been bullish. But as I talked about yesterday, when we come into this daily demand, this 4 hour demand area here, we obviously had a reaction, but we was not giving any significant indication that we was going to go and break this higher high here to create a new 4 hour higher high. So that led me obviously to talking about the fact that if you go down to the 1, we obviously was reacting from this 4 hour supply, and then from here we was obviously extremely slowing down in this 1 hour supply area, and then we started to get that change of trend on the lower time frames, and that obviously indicated to me that we should be looking for shorts, which I talked about on yesterday's daily market outlook, and you guys can go and watch that back as well. Looking at market conditions at this moment in time, it's the same as what I just mentioned on daily. I want to see this scenario here. And that means just very, very slow market conditions, internal structures going on, fake outs into that 4 hour supply, and then that expansion. So very, very simple to understand. Very simple to understand. Building up liquidity, etc., etc. That's what we want to see. And the reason we want to see the build-up of liquidity is because people are buying constantly in this, this internal structure, and then obviously something like this allows it just to come and absolutely swipe it out. So Great British Pound, US dollar. Same scenario, you can see a bit more of a better daily structure now that we've broken these lows. You can see the market, obviously had the perfect reaction from this daily supply area here, and then obviously broke these lows and give a new break of structure. And now one thing I'm just looking at left is you can pretty much see that the market has came into this daily demand area. Vice versa, same as US dollar. So where obviously for me, Euro USD is not in a daily demand. It's already been mitigated by this here. So looking at Great British Pound US dollar, of course it's the same scenario. We're internally bearish. So I'm only interested in long term having this daily demand stick if we break above this high. If we go from daily shorts to daily longs, then I can obviously look to participate in long term longs from the dollar. But now looking at where we're currently at right now, it's pretty simple, rinse and repeat. We want to see, as you can see in here, just the correctiveness, slow market conditions, as we talked about on EU, into this daily supply, and then we want to see that next expansion. It's just rinse and repeat. You can see we go over and over and over again. Look, we have a daily supply here, market slower into that supply, and then we get the expansion. It happens over and over. We have market conditions here, slower into that daily supply, expansion. So, you can see it happens over and over and over again. Look, we have expansion, slower market conditions into this daily supply, expansion, slower market conditions into that supply, expansion. So that is exactly what we're waiting for with Great British Pound US dollar. And obviously it'll be the exact same on the 4 hour. You can pretty much see that we obviously just want to see market pull back. I'm obviously going to just quickly discuss that. We do have, depending on where the dollar's at, when we do get that, when we do get the market pulling back, we obviously have this 4 hour supply at the extreme level of the structure, and then we also have this level of supply here. So either one of these suppliers will be the next area if we obviously get market, to go and carry on this structure either from here or here. We have that imbalance above there as well. So pretty simple. NZUSD, let's see what she's doing. Obviously, a beautiful call out yesterday with NZ from this 4 hour supply area, as you guys can see. Absolutely spot on. Looking at the daily, we can pretty much see the fact that if you look at this daily supply area, this is where market was corrective into this daily supply, and then we had this expansion. So obviously, at this moment in time, we are inside of this daily supply area here, but it's quite big. As you can see, the market's already there. So it is quite big. But if I just go down to the 4, we can start to try and spot exactly what we can predict happening next. So let me just mark out this 4 hour range. Ooh. Let me just mark out this 4 hour range and just make sure everything is pretty clean. So looking at market conditions right now, one thing I can pretty much just spot is the fact that we do have 2 4 hour supplies. The start of an imbalance here would be one supply area that we do have. Again, you can refine this onto the 2 hour and onto the 1 hour. And then we also have this level of supply area here. So depending where the dollar's at, what I'd be looking at and expecting is if dollar can just, come into this area, either this one or this one, and then give us that next expansion down, that would be exactly what I'd be looking for with NZUSD. AUDUSD, a little bit different. It's something that I'm just not really liking the look of, if I'm being completely honest. If you look at the daily time frame, we've not reacted from any sort of daily supply area, and we're not reacting from any sort of daily demand area. So, from a daily, just being completely honest, we haven't even broke this low with Fed fund rates yesterday. So daily, I don't like the look of. 4 hour, what can I see? Well, simply what I can see is we obviously had the expansion yesterday. We didn't break this low. Markets obviously came into now this area of 4 hour demand. So again, you can look for potential shorts, but I would ideally be looking to see market sell off from this 4 hour supply if the dollar and is going to do the opposite. So ideally, maybe looking at if you guys obviously trading the internal longing up into this, but I do expect this to go and break that new 4 hour low down here. That's just me personally, just because if we expect the same in this demand area for the dollar to go and break this new higher high and carry on that next higher high, that next structure, then of course we expect the vice versa with AUD USD. So just keep an eye on that. But again, it's not the cleanest looking. If you just look at the this whole movement here is pretty ugly, to be fair to you. We didn't even react on any supply area for me as well, as you can see. So yeah, still a lot of imbalance above. So yeah, I don't know. I don't like AUD USD personally. USD CAD, you can see from this daily demand, beautiful call out. We tapped in, moved away. This is my new daily demand, but you can see USD CAD's obviously very, very bullish, like extremely internally bullish. So the daily is not as clean as like, let's say, Euro USD, as you can see the pullbacks. So you just got to play into understanding that, okay, this is where structure, not necessarily structure can go out the window, but what people expect with structure is they want to see the cleanest like this, the cleanest pullbacks and the cleanest, etc., etc. Sometimes you just get this internal structure that's going on. So that's where I would then focus on, okay, where's my daily demand areas? Where are my demand areas? And as you can see, that's a clear demand. So that's where I expect market to come into. Now, if you look at the four, you can obviously see where the structure is in a four. Pretty simple to spot. We have obviously this is our 4 hour higher low, and this is our 4 hour higher high. Now, for me personally, just quickly, actually, we did call out USD CAD yesterday. It did dip below taking liquidity. If you look, oh, it did dip below, just taking the liquidity. But as you can see, when we come into that demand, market did absolute madness. So yeah, good call out. Let's remove this and look at what's going on right now. So for me personally, this where we consolidated the start of the imbalance there, that's where I naturally want to see the market come into, in and around this area here. That's my 4 hour demand area. Again, what I can do when I set these when I mark these out is set the alerts and see when market gets into this, and then I'd expect the expansion to carry on. Personally. But yeah, obviously, that's what I want to see from USD CAD. USD CHF, a little bit ugly as well. USD CHF is one of my favorite pairs. From a daily, it's spot on, if I'm honest, because all of these have been perfect. You can see from these demand areas, the market's had a beautiful reaction. So, naturally, first thought is from the Fed funds rates, we've not obviously broke this high, which is annoying because if we break this high, it becomes a lot more clearer. But for me, obviously, we have this daily demand area next. That's our daily demand area next. If it was carrying bullish, um, that's what I want to see market come into and carry on bullish from here. So going into the four, the only thing that annoyed me is obviously I have this 4 hour demand area. Even from the start of the consolidation here, we can see market just came nowhere near into that. I would love market conditions to have been in this area before that Fed funds rates because it would have been a beautiful trading scenario. So we obviously left some imbalance, but you can see a market, was obviously bearish, and now we've obviously had that bullish move. Now, obviously, first thought is markets obviously widths above that supply area here. Am I interested in shorting? Not necessarily. I'm not. I just want this structure to carry on because, as you guys can see, for me, this is the new 4 hour range. You can see that we had all this internal, and we've had this break. So just the same as all the other pairs, I would like to see market slowly build up liquidity correctiveness into that demand and then get that next expansion from this demand area. So let's see. Let's see. And then USD Japanese yen, again, it's still just not really okay, we punched above this. Let's mark it out anyway. It's still just not really the nicest pair. Very wicky. Very wicky. Not much happened you can see yesterday in regards to Fed fund rates, compared to bloody this. Um, but if you look at USD Japanese yen, you can obviously naturally look at the fact that we have, this area here is a potential demand area where we can come back into, just dip in and carry on. If we jump down to the four, you can see that obviously the 4 hour is bullish. The range on the four is from this 4 hour higher low and this 4 hour higher high. So naturally for me, I just want to see market come into this 4 hour demand and then carry on. From here, build up liquidity and then get that expansion for USD Japanese yen. So yeah, that is pretty much what I've got for today, guys. Obviously, after the Fed fund rates, it's not as many opportunities straight away. What most people are doing is they'd be trying to get into these, longs and making mistakes. I'm not one for that. I'm one to, obviously stick to my trading plan and be a professional in these charts. I'm not trying to make money. I'm just trying to, obviously to predict, and that helps me make money. I don't want to make money every single day, because if I do, I will obviously not make money. That's just the way the charts work. Other than that, guys, we will catch up in the Discord. If you've got any questions, fire away. Take care. God bless.